All right. Happy Friday, everybody. We are back on Fintech Fridays, episode number 14, middle of July, beautiful weather here in Michigan. And I'm super excited about my guest this week, except for the T-shirt she's wearing. Say hello to Catalina Kaiyoorawongs.
Perfect.
Yeah.
Hello.
So, yeah, hello, welcome. Before we get rolling, I just want to share a cool story how you and I first met. So this just really, to me, speaks to the importance of A, networking, and B, putting yourself out there. So this probably goes back 2.5 years, which is crazy.
Does it really?
And yeah, because I was still, or maybe it was about, it was about maybe just a shade over 2 years ago. We were at an event down in Detroit, and the Flagstar has their own Fintech accelerator, and they were down at the Innovation Hub or whatever near Wayne State, and they were doing a show with their latest clients or companies that came through their incubator. And I think you were actually working in the building or networking in the building, and kind of were like, what's going on down here? And introduced yourself to a few folks. I don't know if you remember, you introduced yourself to Paul Orlando, who's the mortgage CIO for Flagstar. And he kind of loved what he heard. He's like, you got to talk to Brian at FinLocker. I think I had just come over to FinLocker.
Yeah.
So long story short, we met very randomly in Detroit, and have kind of struck up a friendship and a business relationship, which is super cool. And I just want to tell people how important it is to just put yourself out there, because you clearly did it that day, which is awesome.
Yeah, absolutely.
So you may notice, if you've watched any of our prior episodes, I always like to kick these off by asking my guests to define the term fintech. You know, what does it mean to you? Because it's one of those terms that just gets thrown out there. But in the case of what you're doing in particular, which we'll talk about in a minute, I'd love to hear what the term fintech means to you.
Okay, so fintech clearly means technically financial technology, right? But I think a tech-enabled services that serve a financial need. But personally, as the founder of LoanSense, I view fintech as creating greater capacity to serve underserved markets that are traditionally untouched or not as well served by traditional brick and mortar financial services. So I view leveraging technology and leveraging the network effects of how people live, work, and just participate in society. How can we leverage the way they currently interact with society to leverage better financial well-being in ways that traditional financial services is not doing? And that's what I view the role of fintech as having.
Love it. And I thank you for that. That was awesome. In 14 episodes, we've got 14 different views, which I think is great. I think it speaks to, it speaks to the relative youngness, if that's a word, of fintech, right?
Mm-hmm.
It's still a massive, there's still so much opportunity out there. But let's talk about LoanSense and how the heck LoanSense came to be, and maybe start by just telling your story and how you kind of had to navigate student loan debt and how it led to the creation of this great business and company you built, LoanSense.
Yeah. So, my student loan story is very personal because I actually had to go to multiple lenders to get my first mortgage. I was denied, and it wasn't until a lender sat down with me and explained all the things I would need to do in order to qualify. And I was a gig worker at the time. I'm like an archetype of my generation, right? In my 20s, I was a gig worker. I had all this student debt. I had many barriers to being able, and at that time, that was right when the Freddie policy has changed to allow you to get on a different type of student loan plan and change the way they calculate debt to income. Well, my lender knew everything about that updated policy, but didn't really know anything about the student loan side. So I started researching all that on my own. Long story short, I finally closed on that house, and my work took me to Capitol Hill to work on higher education finance. And that's where I continue to learn about how broken our student loan system is, and how when people take out debt or talk to financial aid officers, nobody understands how to explain repayment to individuals. And I'm saying, if a financial aid officer doesn't get it, how are individuals coming out supposed to understand what they're supposed to be doing? And they really don't understand the impacts of the decisions they make right when they graduate, impacts how they can qualify for a mortgage, what those future opportunities are. And there's nobody there to explain that. And so Loan Sense is the solution to that. So I didn't want more of my generation. I literally have a goal as a company. We want to uplift mortgage, first-time home buyer possibilities to more of our generation with student debt. That's literally our mission. If we can uplift the idea of like, I can't afford it, I can't get this. If we can change that narrative for our generation and get 25% more people thinking and planning about what are the next stages to wealth building for myself, and not let student loan debt make them hold them back, that's a huge, mission and accomplishment that our company could have.
I think I saw something last week. And I don't know, I can't remember the exact numbers. Does 4 million ring a bell of student debt holders with government student loan debt? Does that number ring a bell?
It's 45 million Americans hold student loan debt.
Yeah, there you
36 million are renters, and about 20 million are in the home buying demographic. And if we use standard like home ownership rates, about 10 million of them, a little over 10 million of them should be thinking about buying over the next 5 years. So this is not some niche market. This is a gigantic market. And it's a market that, frankly, we can use their biggest pain point to solve a significant problem to transform outcomes for our generation. And so I want to use this fear of getting denied or fear of never being able to own to create a better outcome that just builds better financial well-being, And so I really want to change the tune of, like, we hear a lot of emotional statements like, I finally get the light at the end of see the light at the end of the tunnel. Things of these types of phrases that people literally feel like this uplift and sense of relief, right? That's what I live for. I live for better user outcomes, through our software and our service.
So let's peel back the onion a little bit, because you covered a lot of ground right there. And what I really wanted people to think about, this is we're kind of a mortgage show. We're in the mortgage space. So, our audience kind of gets this. You talk about this massive population of folks with student loan debt. You nailed it. The demographics are highly skewed to people that are in that first-time home buyer sweet spot, right? And absent tools like Loan Sense, they're stuck. They're either stuck because they don't know that they're not stuck, or they're stuck because they don't know how to get unstuck, right? So let's go back to your situation and kind of talk us through how you learned how to unravel that student loan debt spiderweb.
Yeah. So first, I want to say that more like great loan officers understand the mortgage credit rules, but they don't understand student loan policy. Great CPAs understand marriage tax filing separate implications, but they don't understand the change in student loan payments. Your loan servicer understands student loan rules, but don't understand impact to DTI and mortgage closing potential. So we literally are creating tools that connect where other financial professionals are missing the answers to, so that people can make more informed decisions and understand that if I enroll in this income-driven plan, this will help me reduce my debt to income by X. It will help me qualify for Fannie versus Freddie versus FHA, USDA, whatever the mortgages are qualifying for by this much. I can actually increase my affordability. Our users on average, $98,000. we explain that impact so that there's not this void of like, how do I Google the answers to my very personal situation? And there are no tools out there that answer these questions that are at the intersection of, I have a lot of debt, my DTI is high, and what is the action plan I need to activate in order to overcome this issue in a way that's guided? LoanSense will even file their paperwork, to help them enroll in these programs, and we'll be there to answer questions along the way. So how it works specifically to Unravel for me, like at that time was 2014, the loan officer explained the DTI aspects to me, but didn't really know. They just said, call your servicer, right? That's what a lot of LOs say, call your servicer. Well, it's not as simple. You have to file paperwork. And especially right now, student loan payments are being paused. Servicers literally a month ago just activated their ability to let someone call and get themselves out of pause before you had to file paperwork, because there was no huge administrative pause like what we're seeing now. So all these different changing processes, people just don't know how to self-advocate. They don't know the questions to ask. They don't know the action to complete. And 2% of those individuals, if you say, go call your servicer, if they don't qualify that moment without doing something, jigging their student loans, you're not going to get them back, because the process is overwhelming. It takes too much. They have other things they got to worry about. They disappear. Whereas if you just had a connective ecosystem that said, okay, you need to do something with your student loans. These people can help you. This is the onboarding process. Go. We can keep you in the loop and like estimate right away, what is the increased affordability, help them enroll, and then bring them back to you so that they're not lost in this web of like, what are the options? Where do I go? What am I supposed to ask? What am I supposed to file? Where, like what debt do I pay off first? I have, so there's all these pending questions that I think LOs oftentimes, there isn't enough time in the day to sit down and counsel each person. This is what you do. And then there's just not enough resources. And then people don't know, where do I trust? What do I trust? And so many, if you Google student loans and mortgage, so many people will push you to refinance your student loans, which can actually delay you from closing, or as well as consolidation. And people just don't understand these actions. They just see like a lower interest rate, similar to mortgage, right? You see, I can go to that lender because they're going to give me a lower interest rate. I'm like, that's not real. You might not even qualify for that. You know what I mean? So
you hit a good point there with refinancing, right? There's two things I want to kind of peel back, and I've never had student loan debt, and thankfully my kids didn't have to have student loan debt. Mm-hmm. Well, let me rephrase that. I never personally had student loan debt, and my kids didn't have student loan debt. That meant I paid their. You
were their student loan.
Yeah, and I think they were immediately forgivable now that I think about it. Anyway, that's a different story. As you and I started to kind of talk about your product and how you help consumers, you shed a light for me on. I guess I just assumed student loan, you get a student loan. You get one student loan and that's it, right? That's not it. I think you described a scenario with dozens.
Yeah, you can originate 2 to 4 loans every single semester. And your parents can also originate loans. And so every semester you get a new loan originated at a different interest rate. Every academic year, Congress sets the interest rates. So you may, and then if you go back to grad school, the interest rates from undergrad versus grad school may be vastly different. So then you could have 20 student loans. Oh, by the way, that could possibly be with different student loan servicers, another thing. Yes. And because of the time gap of when you took them out, they could also be eligible for different repayment plans. So there's just layers of complexity that it's just hard to give a blanket go on income-based repayment. You can't give that blanket statement for everybody as the best course of action, because you don't know what student loan they have, when they took it out, what their interest rates are, what the options are. Is consolidation the right answer? We don't know. What's their payment history? There's a lot of different factors that determine what the best answer is for their student loan. And And then also other factors that take into place. Okay, what's the best option to now qualify and reduce the debt to income, right? And sometimes they're separate, right? So it's just helping people navigate that and having a digitized way to just connect all your student loans you've ever originated, all 20 of them, if that's your case, that spits out the best course of action based on your goals, and that can enroll all the appropriate paperwork to realize that goal.
And there's also, for the people that aren't aware, there's a big difference between the government student loans, right, and then private. And this is why why you caution people not to just rush to a refinance.
Mm-hmm. So because
this is another thing I learned.
Yeah,
those refinances, most of those are private, right?
Yeah, so refinance is always privatizing your student loans, and there could actually, well, first of all, the majority of Americans don't qualify to refinance because you have to have stellar credit, you have to have work history that shows you can earn stable income. In which case, if you don't, then you have to have a parent like Brian to co-sign for you. And then now it's going to be like his liability, right? So there's a lot of different factors that a lot of Americans can't meet those requirements. I have a doctor recently tell me he earns $500,000 a year, and he said he got turned down for refinance. I'm like, why? And they're like, because his credit score is under 700. Because of the amount of debt and other various factors of credit card debt and things he got into while he was in medical school, and they won't let him refinance. And I'm like, that's unbelievable to me that they wouldn't let you refinance. Yeah. Like, what kind of story does that tell, right? They're like, oh, they said I could refinance in a year after I have more work history. I'm like, oh my God. So anyways, the point is very few Americans qualify to refinance. And also when you refinance, you lose access to federal protections. Like the government automatically gives you disability protection. So if you become permanently disabled, as defined by your doctor, like early onset Parkinson's, even that's considered permanent disability, you can get your student loans forgiven. If you die, you don't have someone co-signing that now has to pay your student loans. Things like that, you waive. If you lose your job, you can get on a lower payment plan. You can't do those things when you privatize your student loans. You lose those protections.
So I think now we've painted the picture. We've clearly
way too many details.
We've described the mess that is student loans, right? And specifically how that mess impacts someone's ability to buy a house and get a mortgage. So now I'm a student debt holder. I've got 8 loans or whatever, and I'm introduced to LoanSense through a loan officer, right? Who says, hey, if I'm going to send you over to LoanSense. They're going to show you how they're going to not only show you, but they're going to help you lower your payments because you're eligible to have your payments lowered. And then once that's done, your DTI is going to go from 62% to 41%, and I'm going to be able to get this mortgage for you, and you're off to the races. Let's talk about the technology that you built to do that work.
Yes, and I'm glad because Brian's been part of seeing our technology since the very start. So it's come such a long way. But basically, we created a super easy plug and play front end that loan officers and lenders can basically put on their website, just have a link anywhere they want that allows a consumer to estimate the increased purchasing power or purchasing budget of a consumer by considering a federal program, right? If they have federal student loans. And then our platform will actually have them answer a few questions. They connect all their student loans, and we, based on, again, a goal, if home buying is their goal, they set that goal, we output the best plan and we enroll that paperwork. So on LO, the best way is to obviously go to our partner. Like if you go to myloansense.com and we have a partner page, you can basically, we have a link there to get started, find out more about how to get this purchasing amplifier tool. And we get you one, and you could start automatically letting consumers use that. And we're launching a partnership very soon. I probably shouldn't say it because I haven't gotten permission to say it yet, but it'll give you access to other tools as well. that will allow you to demonstrate the value of this increased purchasing power, and will automatically invite your consumer to get started with us. And or if you're old school and just want to like send someone over through like a phone call or just sending them over and we'll onboard them, that could be done as well. So whatever style works best, we can accommodate it, as long as there's no faxing. We do have fax, but we don't go back that old school.
No crinkly paper. So that's cool, because what I'm hearing is what comes to mind is this term that I love, which is high tech and high touch. You have the technology that you've built with LoanSense that, like you said, links those student loan accounts, runs the analysis to find the best plan program for that consumer based on their goals and objectives. But then you have the concierge service, which is also part of this. This is a complicated process. I would argue, based on what I've come to know over the last 2 years, just kind of having these conversations, that this is actually more complicated than doing taxes, which is insane.
Well, yeah, it's complicated if your student loan situation is super complicated and you can't afford the full monthly payment. 2/3 of Americans can reduce their payments through these federal programs. And it is our concierge service basically allows, as soon as they purchase our concierge service, they get assigned a student loan advisor. They could, if they're, we have digital only kind of audiences that want to text and enroll and just ask a few questions. And then we have people that want to hop on a video call to like see the person they're talking to and make sure they're getting good advice. So we'll roll with the punches, however the consumer wants to work, but we're accessible to validate any of their questions before they click enroll. We send them eDoc signatures, and submit the paperwork to the federal government their student loan servicer. And then within 2 to 3 weeks, they get a letter back that confirms that lower payment plan. And that letter can be submitted for the home buying underwriting process. So
yeah, I was going to ask that question. So if everything lines up perfect from the time a consumer starts with you to the time they get that confirmation that their payment's been reduced, maybe 3 weeks at the law, again, they got to do all their work. But
yeah, as long as they're not in default or some type of, totally depends on, it could take 3 weeks, 2 to 3 weeks if they're on it. But if they've defaulted or have a complex situation, or have had many issues, filing their paperwork, making payments, et cetera, that's where things get a little more complicated. If we don't have to rehabilitate their student loan or something because they haven't paid it in years and they need to get out of that CADVIR system or whatever, then it should be about 3 weeks time or even less.
Yeah, which is cool. And more and more, today, one of the major impediments to buying a home is lack of inventory. But so more and more first-time home buyers, it's a process that's going to take them some period of time. And I think the takeaway for those that are watching and listening that are in the origination business directly, especially loan officers, you ought to reach out to Catalina and LoanSense and get hooked up with her platform, because you're going to have, based on the numbers we talked about when we started the show, there's a massive amount of first-time homebuyers over the next 10 years that are going to come in saddled with this student loan debt, and this is a tool that you as a loan officer can give to your customer. That just, to me, it just adds to the trust level that you build with your customer. So
it's like a marketing. It's like a marketing message you're showing. The marketing message you're showing is, you're the person I want to work with because I care about your pain points. You're dealing with this debt. It's impacting you. I care. Let me help. That's the message. Even if you know nothing about student loans, you don't need to send them to us. But the message you're telling them is, I care enough to provide this resource that at this point, most lenders don't have. If we do well, maybe many lenders will have it soon. But, change is slow.
This was awesome, Catalina. I think everyone, I I know I learn every time I talk to you, I learn more and more about this crazy business and with student loans, and love the work that Loan Sense is doing. I think it definitely is mission oriented, and hats off to you and your team for the great work you're doing.
Thanks.
I know you're making traction in the mortgage space, which is awesome. Let's wrap by just maybe sharing something with our audience about who is Catalina outside of Loan Sense. What's your story?
I love it. I feel like I live and breathe it as a founder, right? But
Yeah, of course.
who am I? So I came to Michigan by accident by going to the Ross School of Business, but I am a Floridian. I love the ocean. I have a dog. I love to travel the world. And I think I bring a unique perspective, as people are aging in the lending space, in the mortgage industry, that I think will better enable us to solve the problems of our generation. And that's really what I aspire to.
Love it. And I know for a fact you're very passionate about that helping consumers, and really you've pinpointed that pain point in the mortgage buying process. And again, I commend you and your team for all the great work you guys are doing. So
Thanks.
thank you. Thanks for jumping on. This has been fun. I'm sure we're kind of neighbors, and as far as mortgage goes, we're probably 30 minutes away. So I think a post-pandemic lunch is in order.
Yes. Thanks, Brian. Thanks for.
All right. Thanks for joining, and everybody, thanks for joining our show again. We'll see you next time.
All righty.